push. But then Merkel was firing back against Macron. I mean, this is going to be a long, drawn-out process. But, you know, absolutely Lagarde is just powering ahead with this. And she's got a couple Germans, you know, what's the name, Schultz, who came out the other day in favor of a banking union. And he knew he was walking into a minefield because the Germans immediately hit back going, well, we have no idea what this is going to look like and who's on the hook for all this debt and the banking situation, and how much is the insurance program going to be for us. So there's a lot going on. There is a lot going on. But we see that the European equities are finally starting to get it, because if I had to read one more person why they were bearish, or somebody on CNBC coming out why they're bearish on Europe, yeah, you know, I think they're missing the underlying, and not that this is going to happen, they may well prove out to be, you know, but there's certainly a push on, and it's coming up fast, you know, for the fiscal stimulus. So that's why they're backing up, because people are going, uh-oh, you know, I was forced to buy this because there was nothing else, and it's even corporate debt. So people are getting nervous. And if I read one more, you know, who was it? Who originally wrote about the Austrian? Who was it? Was it Jimmy Grant? Yeah, it may have been Jim Grant, who talked about the risk. You know, they look great when they're going your way, but when they start to roll back on you, it's going to come hard and fast. So I think we got a taste of it this week, or for the last actually 7 or 8 days.
Yeah, I mean, I just spent going back to 2004, 5, and 6, digging out EURODOLLAR numbers.
Yeah, no. Listen, and the European Bank Index that we looked at, you know, weeks ago. Oh, really, yeah. I was back at it, looking at today. I never bought it, but I've been in an EWG for that reason. But, and the DAX has outperformed it, so that makes, to me, perfect sense, because you got 0 to negative interest rates, and with any kind of fiscal stimulus. So the concept of the trade affecting this market as much as it does, it still boggles my mind. I just
yeah, I mean, you know, yesterday everybody wanted to be short again. You know, and it's just like when I looked at the peso, and I looked at EWW, and I looked at Kansas City Southern, you know, and I just wrote to everybody, you're out of your mind to sell anything.
And you know what? I was trying to buy Ruble last night. I didn't get filled, but I said, well, and you know, you saw RSX bump to higher today. So I don't mind being out of a third of it. I want to see how hard and fast it could really run. I mean, with dividends probably up about 37, 38% in the year. KSU's up 50%, but we'll see where it goes from here. You know, this is running hard and fast. But I think that the analysis that guys talked about in this room, not me, but others talked about, you know, the rush to year end, because there are a lot of fund managers who are really underinvested.
Yeah, I think Angelo was basically saying that the yield had come down to around 4% or just under 4% because of the rally.
Yeah. Well, so anything in particular? I really have
no, I was just looking at all the news overnight, and I woke up in the middle of the night, and I was looking on Bloomberg, and the fact that the Chinese had stopped buying gold, and the currency, you know, the yuan gold reflects it. And then, you know, it's wedding season in India. Yeah, and what their demand's down 47%.
Yeah, because the price. Yeah, but more importantly, look at the way copper. It's amazing how copper trades off the trade. Negative, down 300 or 3 cents, 4 cents. And today up 6.5 cents at one time. So quite a feat.
And to me, the copper trade it's just going from one of our levels to the next, and there's no trade in between. And either you trade it at a level, risk on, risk off, or you don't trade it. Right.
Or get yourself into some copper stocks. You know, I saw Freeport what it did. So even if they have a big presence in the gold market, it still is able to throw it off. I mean, since we've talked, as I said that my favorite one was Glencore, and it's been holding in here pretty good. So I need to see Glencore break above $7.50, but that's asking a lot of it.
Yeah, I mean, there's Freeport. The other one was your buddy likes Southern Copper.
Yeah. Yes, he did.
Yeah, and that actually is a better trade than Freeport, and it's a really nice pattern.
Yeah, Freeport, because Freeport did buyouts, so they carry a lot of debt, so they're not a market favorite. It's the same thing that why Barrick suffered. And it was interesting that gold stocks got a rally as strong as they did. Yesterday, I think, I was in a meeting, so
it was either yesterday or the day before. They caught a bid. For me, it's still, the metals are just following the long end of the curve, and they have been.
Yeah, that's exact, and it's really hard to believe because if you ask me historically, that's not the relationship, but right now the algos are totally tied to it. They just take any debt instrument. Oh, yields are higher? Yep, selling metals, except that not the industrials. Because that's really a barometer about how easy the system really is. They're not using it for the gold, but they're using it for copper, and then you'll get an economic burst out of here. And there was an article in the South China Morning Post this morning that the Chinese actually have a lot more room here for stimulus because government debt in China. It was a really good article.
Well, this goes back to everything that you were asking Faber in that interview the other day.
Yeah, and I told you as I disagreed. Mark and I went back and forth on it, but I just don't see buying long. Me, I've been very consistent. I'm not buying the long end. Not when I have to pay away so little to shorten my duration. I am not doing that. I just don't see the deflationary scenario that some people are talking about. We talked about it the other day, and there's a lot of very bright people, but I just don't see it because I just don't think they'll let it.
I mean, I'm looking
Any questions?
Yeah, I'm trying to get these guys to ask a couple of questions. I'm looking at platinum yen. That totally fell out of bed today because we were looking at trying to do something there. I mean, that's just toast.
Yep. Yeah, the yen's actually held up pretty well, but so has yuan. And I love that was good that you sent that yen yuan chart out. Interesting looking chart.
As soon as I saw that on the pattern recognition this morning, it was on a different one of my screens.
Yeah.
I just told Matt, whatever you do, don't even think about selling anything.
What do you mean? I'm short gold.
Well,
am I all right there?
Yeah, I'm sorry, but yeah.
Oh, no wonder you're smiling.
I was a miserable person yesterday.
Yeah,
miserable.
That's right. Well, you're a miserable person every day, but that doesn't have one has nothing to do with the other.
No, that's true. I came in a few minutes late. I apologize for being late, Ira.
There's no apologies. You get what you can do, what you can do. That is more. So what else is going on?
Nothing.
Let's get some questions.
Let's get some questions here. And here's the other thing I was looking at was I'm just going through this yen yuan, and I'm going to send you the weekly because now it's negating the whole last 6 months of price action.
Yeah.
Yeah, I'm going to send you this because this is kind of interesting. It's at 1564 was the old breakdown number, and that was the target. And now we're above that at 1568. So that's, it's got more to go.
Yeah. Okay.
And then, guys, you got any questions? It's a really good time to ask them. Come on in.
There was somebody, Ira, the other day when you had asked the question about, we were kind of talking about Trump and all of that stuff, and you had asked, why are people so angry? Why are people so angry? I got a response later on that said, people are angry because they're begging for deflation, and the Fed keeps shoving inflation down their throat. They need some deflation so they can stop, breathe, and reassess value. They're sick of running on the inflationary treadmill.
You know what? That's a very sophisticated answer question. And, I don't think that's why people are angry, because that would be like a Tea Party answer to me. Yeah. That you want things to be liquidated. That's the a Ricky view, and I'm not sure that he's even, because now he celebrates everything he sees, and he's not happy with the Fed. But hey, it is what it is. But now I'll tell you this: the Fed looks like absolute, honestly, absolutely out of touch with anything, and the fact that they should have held their fire, because would you have gotten this regardless? Probably. But what were you cutting for? We already knew that the S&Ps were making all-time highs, right? Mm-hmm. If the market was on a rally, you could have, in every way, shape, or form, there was no reason to take that third cut other than the fact that you suffered from not wanting to disappoint the markets, because you laid the groundwork already. And that's a very critical factor. But you went even farther, because imagine, what if the talk becomes of raising rates at the December meeting? That's a hypothetical question.
But the market has got ahead of these guys.
Yes.
Yeah. Somebody sent me a thing. It wasn't any of you guys, but about 2 hours ago, that the Fed would be embarking on buying the long end of the curve because long rates were coming off so hard. And I said, not a chance. Because first of all, let's be honest, they wanted to steepen the curve. I mean, I couldn't have been more adamant that was my view, and I still maintain it. And you see how dramatic it's been. So, this is what they've wanted, so I don't see them coming in to do QE on the longer end. Not whatsoever. So I forgot who sent me that. Somebody who I respect, but I sent back, I said, no, not a chance. I just don't see it. That would be, indicative of more. Right now, they don't need more QE. What are you thinking about? What are you doing?
My thought may be way off base in regards to that, but I know that a lot of people are trying to equate the injection of liquidity in the overnight repo market. They're trying to make that into, and it is a form of stimulus and quantitative easing, but it's not QE. Is that somehow related? Of course it is, but how is it related? Is a better question.
Well, it's not QE because we know. Holy shit! Sorry, it was a guy's driving totally out of control. He almost hit a truck and a car at the same time. How we avoided him, I don't know. It is QE, but because of the duration and because it comes due so quickly, that's why they say it's not QE. But you are still fluffing the markets with, you're trying to remove any doubt that there's enough liquidity to handle anything. So it's QE light, but it's QE. But it's only the only thing that they can defend against it is that, well, it's a concept of duration. And again, but so much of the debt market is all about duration. You know, that's where I disagreed with Faber about. You know, he's willing to trade for that capital gain. I don't see it. So I don't like the risk factor, because I'm not worried. You know what? They've told me, and he's preached this for years, as long as I've been reading Faber. The Fed is and will always be more worried about deflation than they will. They give lip service to inflation, but they fear deflation.
Yeah.
And that's why we're living in the world. So I go back to that point. They fear deflation. They're not. They're just, and the politicians. That's where they agree. That's where monetary policy and fiscal policy come together, when they both fear the effects of deflation.
There was another question too by Terry Biondo. He was at S&P trade. His badge was bio on the trading floor. You know Terry.
Yeah, I know he is. Sure.
He asks. It was about earlier. We were kind of talking about the depression of some commodities if being dollar related. So he writes, corn baffles the hell out of me. Was the break today dollar related?
Yeah, you know what? Tell him I'm because I've been long the beans, because it's been, I have not seen such consolidation in the market at this time of year like this. I mean, you look at a bean, I mean, this has been a very tightly consolidated market. And then, of course, you get days like yesterday when it looks like the tariff situation is going to be full throttle, then they break the beans. Now, we got a report tomorrow, carryover and export numbers. So, but it is interesting that the beans, I don't know, I don't think I was shorts, because I just don't think there's that many shorts right now. If you look at that, at the charting patterns and everything, that why should you be short? I know they got, I think, you know, some of them will tell you that because they got rain in South America, and it looks like, you know, it was a little bit dry and people were nervous. The crops going in the ground, they were dry, but now they seem to have gotten rain in critical areas. You know, I don't know. I don't think it was. The dollar, of course, yeah, you know, but again, what are the Chinese doing? They're playing Trump here because they can give here. They need food. Look we know how bad the swine, you know, the swine flu epidemic was in China and the decimation. They need food. They need to ensure that they have enough food. So, you know, they play with Trump, and they don't do things all at once. You know, hog prices dropped dramatically, but the rebound in the meats has been nothing short of, you know, dramatic. And the grains are holding in here. I just think people are, you know, they're nervous because we have gotten swings off of grain reports. And again, tomorrow's a grain report. And the corn has struggled here a little bit. You know what I mean? It's not nearly been as robust as the wheat or the beans. So the ethanol producers have not been happy, or the renewable. So I don't know. I can't answer. It's a good. I'm having the same questions with the grains. Where are we going? What are we?
And you got gaps down here too. Technically, it's a lousy trade in here. It's just a total lousy trade.
But I will say this: the grain, like Faber and I talked about, the grain companies have actually done pretty well. You know, there's been some recent movement in Bunge up a little bit. Archer-Daniels, that chart looks really good.
Oh yeah, and today's low is the 200 week.
Yeah, it's
200 week this week. It's way above the 200 day.
And that's right. But that's been a company. You know, again, how much of it is due to poor management besides poor markets? Because, you know, well-managed companies can still do well in very mediocre markets. That's what makes a good company. but they've been, I think, badly mismanaged. The movement in KSU is, wow, you know, breathtaking for a railroad. It's still a friggin' railroad, but its movement has been unbelievable. I like some of the stuff that we're seeing because it's starting to make the cases to where we're at. And again, and I think Faber's right about this too, is that 2020, the next 2 years, I think are going to be heavily oriented towards quality stock picking.
Yeah, I mean, this is just an unbelievable chart.
And you know what? And again, I go back. If Warren starts rising in the polls, and it does start to take a, you know, the equity markets start to reflect it, the bond markets are not going to be the savior. Because if you don't like the equity markets, why are you going to like the bond markets? Because if you're fearful, there's just not enough yield there, right? If you're afraid of Warren, and I think these guys are really wrong for being so vocal about this. I do. You know what? I think Wall Street needs to mind its. You know, just because you have a lot of money doesn't make you.
Well, Gates was joined in too, saying he wouldn't meet with her.
Yeah, you know,
he didn't like her wealth tax plans because for him it bites into his giving plan.
Yeah, no, and you know, but Leon Cooperman had said that originally
that
too.
was a good one. Yeah, I like Cooperman's
Yeah.
response. I did like that.
Yeah, but you know, they're getting too out in front of her, and I think that it plays to her because, you know, she'll attract a lot of the same voters that Trump attracted.
That's a good point. Because
they couldn't vote for Hillary because they viewed Hillary as more of the same. So, but she'll attract some of those voters. And I think if you listen to Trump's people, they knew that months ago. That's when Trump started talking about the dollar more, because she's one who wants to talk the dollar down. Go back and look at her white paper and some of her economic. She wants a weaker currency, because she thinks it benefits the American worker. And you know, don't forget, Trump has spoken to that too. So you know, these guys, I wouldn't be out front, you know, making noise about it. They think that they're going to win this battle. I'm not sure. In fact, I am sure. I think they're making a grave mistake. So, but that's going to start to get interesting. But I certainly wouldn't be buying bonds, by the way, if she starts becoming a greater threat to be elected. I think that's the right way to phrase it. I would not be buying bonds because, you know, she cares nothing about that. Let's see. Hold on. I'll call you guys back, okay? I gotta take this.
We're still live here, so I can stop recording or pause this for a minute. Does anybody have anything you want to talk about? We'll go look at it.
My son-in-law's mother passed away. Tex, you may know him, Josh Lerner. He was in the pit. He was in the pit long ago for a short while.
All right. Well, Pax is, I don't know what he's doing.
Yeah,
but
it's
you know, everything just sold off pretty good in the last headline about about trade. I sold out half my Mexico.
Okay. Yeah, you know what? It's all tied to that. So one side plays the other, right? That's what we're going on here. So and the trade ridiculously is just caught in the middle.
Yeah. And we had the back and fill in the S&Ps in the pit. You know, it's trying to come back here and fill the gap. You know, the most you get is, I think, 70. If you got 76, you get the full-on gap fill.
And what What was that?
30.76 in the S&Ps.
Yep.
And it'll take a 30.71 print for a reversal on the 25/3.
Yep.
So and it's 82.07 and a quarter in the NASDAQ right now. Here, I got to get on this other screen. So you guys can see it. Hopefully, I'm on the right screen. All right, are we on this screen, guys? Am I on the right screen?
Yeah.
Okay. All right, so that's what we're getting. You know, they're hitting the chips. The semis are coming down for the gap fill right now. The semis fill the gap at 132.67. They just filled it. JP Morgan's coming down for a gap fill. They all are. Now the question is, can the algos get them going and actually do something with it?
Yeah, you know, they're really going to be betwixt in between because the bonds are not going to rally it back like they usually would do.
No, and the gold's not really moving either.
Yeah, it's bounced $9 off the bottom. Whatever. It's got a lot of work to figure out here because again, it's reacting, I think, as much to the interest rate. Well, it is. There's no question about it. Even though I think they're going to find out a lesson, because again, the curve steepenings have just been dynamic in the short run here. So, and again.
Well, and Langer also pointed out today is another GAN day. It's the 7th and the 21st. So if you get extremes today, it can be less at the end of the month than it is now.
Yeah, I mean, so okay, let's come with some questions. It's really a good day for questions.
All right, guys. Matt, were some of those other questions that one of the guys
I'm looking.
had?
Hold on. There were some good ones up there. Get it back up in there. Ira, here's a question. Ira, are the banks hoarding liquidity? Why do they need to continue the overnight repo auctions?
They are hoarding liquidity, and because of the regs, they need the liquidity going into year end. Last year they got caught off badly because remember, let's go back to the famous phone calls of Mnuchin to the banks over the Christmas weekend. Don't forget that. That caught everybody off surprise. I don't know if we were. So I was jumping in those meetings, but I remembered I wrote a blog about it that night when I found out about it because that was like a Saturday, Sunday. So Monday was really low.
All right, guys, in my room, I'm looking. I've got bids in here at the. Oh, sorry.
Yeah, no, it's okay.
All right,
Go ahead, tell them what you got going on.
Yeah, please.
I mean,
all right, so I've got, all right, I just got, real quick, guys, and I don't mean to interrupt. They just got bids in it to fill the gap. I got bids in front of them to cover shorts. I got short Judd at 87 quarter, but small size. I should have increased a little bit, but it's smaller size because it was later in the afternoon. So I'm going to cover some down here at 77 and a half.
And I sold out the rest of my Mexico.
Okay.
FYI. And I'll just wait to see how that trades out later.
All right. I'm sorry to interrupt, Ira.
No, please. So, we have to think about that. And last year they got caught off badly, because you have the liquidity coverage ratios, you have the needs for short-term liquidity, and and that was in the midst. Again, I go back to Druckenmiller's double shotgun. So they were raising rates and reducing the balance sheet, which was, as Bookfire's nicely been out in front of everybody calling it the quantitative tightening, which really created liquidity problems. There's no getting around it. That's the situation I was in. So they're trying to prevent it because they don't know. Again, they don't know. And I can't stress that enough because the media who depends on them, they need access to the, if they irritate the Fed, guess who's not going to get called on? Guess who's not going to get an interview? Guess who's not going to get spoken to? So they're very careful in how they challenge the Fed and Fed speakers and, governors and presidents, because they need access to them. So they don't go on the attack and say, hey, you don't know what you're doing. Well, in the essence, they're groping in the dark here, and yet we all want to believe, every one of us, when we go to sleep, that the Fed that they know what they're doing, and I have called it for years, it ain't rocket science. And I mean that because most of these guys have what they call physics envy. You know that. That's what they speak about, all the economists, especially who graduated from MIT. They all have physics envy because they want the numbers to be work off a formula and know what the outcomes are going to be. But they don't. This is not rocket science. You don't know where that space capsule is going to land in the ocean. I always think of it in terms of, I was so into space when I was in my early years, when I 10 to 17, 18 years old. I loved watching all the flights, when they would come back and land in the ocean and they would get picked up by the ocean. They had a pretty good idea within, a few mile radius of where that capsule was coming down. And I just tongue in cheek say, the Fed has no idea where this ends. None of them do. And you see that now that Draghi is on his way out. They couldn't kick him hard enough. But meanwhile, they sat there and just absorbed it. And he took what Bernanke did and applied steroids to it, human growth hormones. Well, if that's good, let's keep going. And again, if you can tell me that they know the exit strategy, explain it to me, because I'm still waiting. And that's what the greatest fear is here. What is the exit strategy? And you know what? Equity markets don't care because it's been a free boost. They've ridden a wave of gigantic, it's a tsunami. It's a global tsunami of liquidity. And it's kept the, especially, and now you're hearing a lot of criticism about the United States with all the stock buybacks, because all they are a financial engineer. And you have guys like Ben Hunt and even Chris Whalen had a great piece yesterday about Citibank. You can go dig it out. And he, to me, is the best banking analyst right now going. I've been a Chris Whalen fan, but so again, how does this end? We have no idea, and they have no idea, and nobody will say it. So is this, will the liquidity tighten? Maybe. It might be. It all depends upon the regs. And, of course, the banks are trying under this guise of the repo to get the regs rolled back. There's a big battle going on. And they fear Elizabeth Warren or any Democrat that would get elected that they won't be able to get those bank regs rolled back. And they're hoping to get it done in a Trump administration. But I think that this is a third rail going into the election, and that you really don't want to push on this. I think they waited way too long, but just my opinion. We just don't know what this is, but a lot of it too is because, don't forget, the deficit has gone up dramatically. The Fed is selling huge amounts of T-bill because they're funding it, the debt in the short end, and that's putting more pressure on. So there's a lot of variables as to why this liquidity is tightening, but they need the permanent repo facility. And you see, what are they doing? They're just extending the terms on the repos. So now they do 2 weeks. It's not just overnight. You're getting more of the longer duration because nobody wants to get caught off here. And the Fed applauds it because it takes some of the light shine off of them, which is, just as well.
Well, that's interesting. So if you think that they start pulling back on they start going after these regs that all these, well, I'm just trying to envision what middle America thinks about that. They probably think it's a good thing.
Well, I don't think so, Judd. First, no. the big banks tried to play it with the community banks. You know, well, we'll just roll back those. You know what? Again, let's go back to that question of anger. You know, there are a lot of people on Main Street who go, hey, the banks got bailed out. They got fully bailed out and then some. So, you know, that gives a lot of fodder to people like Warren and Bernie Sanders and Biden. There's a lot of fodder out there to play with if that's what you keep attacking, going, well, do we want more of, you know, 2007? Do we want another one of those?
Well, that's what I was kind of getting at, was that won't that play to the middle America that they got screwed by the banks and they're still left holding the bag? Right.
Yeah, they're not in favor of this. So this is just the last push by Wall Street thinking, well, the window may be closing here and we want to roll these regs back. But I'll tell you what, I read the regs because I read the Dodd-Frank bill back when it came out. I thought it was, I was very underwhelmed by it. Let me tell you that, because as far as I was concerned, the banks wrote most of it anyway, which is why, you know, and it was always fascinating to me after I read it and then read it again that, you know, Chris Dodd and Barney Frank, and I think Barney Frank is a decent human being. I really do. And I think he's very knowledgeable of finance. But I think they got beat on so much by Geithner and company during that they were so watered down that after, you know, it's amazing that they both resigned from Congress. Can I put you on hold for just a second?
Sure.
Okay.
All right, guys, put in your questions, and we'll try to get to them here. Yeah, because that's basically the conversation, you know. And if they start beating on that drum that nobody went to jail and they're getting away with murder again, you know, I want to hear Ira's thoughts on that, but that doesn't play well to Trump basically pulling every regulation in the world and saying, go do what you want. From the Environmental Protection Agency, Clean Water, you know, what they basically gutted the National Weather Service.
Hello?
Yeah.
You guys hear me?
Yep.
Mm-hmm.
Where were we at?
Yeah, so Joe basically says, what happens if the Dems start beating the trust busting drum? That would play well with the people, right?
Yeah, I think so. You know, that's what Warren sees. You know what? And again, when they keep jumping on her, I don't think it hurts her. I think, you know, it plays to her and the people go, see, she must be right because look at how they're beating on her. So there's a lot of things. Listen, nobody knows. There's so many uncertainties here. It's just amazing how, again, the complacency. But the complacency is a result of ultra cheap money and the continuation of ultra cheap money. And everybody's talking. You know, why are the bonds backing up here? Okay, that's the question. Why are yields on the long end rising dramatically? You know, here we are. We're back at, you know, basically 1.90. The French actually turned positive today, the French 10-year, believe it or not. The German is, you know, has dropped from negative 71. What's the last quote I see? You know, down to negative 27. That's 44 basis points in not a whole long period of time. So the question is, you know, what is everybody looking at? What is everybody concerned about here? I think more than people want to believe, and for good reason. There's a lot of, but easy money has driven investors to the realm of complacency.
because, hey, why not? You got everybody searching for some type of yield.
Trade the flow until it stops.
Well, that's as a trader, but there are a lot of people who are investors, and for them, it's a little more difficult.
Yeah, I mean, here one of the patterns I'm looking at right now, Ira, you got no RL day in Amazon, and I don't believe it. Came right down into the short-term averages. I mean, I wouldn't believe that pattern for anything.
Yeah. And it was amazing as these curves steepened how the bank stocks took bids, right?
Yeah.
I mean, the correlation is, and yet I think, okay, it's a powerful correlation right now because the algos are just built to it. They take the long yields, plug it in, and when they see things that are moving it, they take their key from that in certain ways. First of all, we know they sell the precious metals until they don't, because that too will change. Because steepening curves, that's what we were talking about before, are not like people think. The long end does not drive asset prices, not at these levels, but it does because the algos are, that's the way the programs are written. They see X amount of move, they react in that way. But we'll see how long those really last.
Yeah, the whole world.
Go
ahead.
Come on, keep them coming. This is a good day for questions because we're kind of all over the board.
Guys, now's the time to ask your questions.
I'll entertain anything.
The big things I'm seeing right now is Humana and United Healthcare. Here, this may be a weird question, but what's your thoughts on real estate in the U.S.? Investment grade real estate like multifamily industrial?
That's a great question, and I am contemplating it. I just don't know because I don't know the impact from WeWork. Okay, they had so much property locked up that I don't know what this. It's too early to tell what the fallout is going to be. So I'm an issue I have no idea because their impact is going to be, I think they're partly responsible for some of the tightness in, certain urban markets. Because you go, wait a minute, who can be building these? But they took up a lot of property. Well, now that property is going to make its way back to market because there's no way that they're going to be able to sustain that. Otherwise, they're going to be in bankruptcy in no time if they try to sustain all those leases that they locked into. So I can't tell you. I really can't. To me, everything looks overbuilt, but that's just anecdotally. But we'll see. And again, and how many copycats to WeWork were there? It's like with everything. Once something becomes investable, there are a lot of copycats. So how much of that property has been locked up in these types of deals that will make itself back on the market? And and what type of financing costs do they have? Because, leases are liabilities. Don't forget that. So WeWork has massive amounts of liabilities because these are not leases that were done in distressed situations. These are leases taken out in a fairly robust market. That's why most really good real estate people that I know, and I do know a lot of them who've done really well, they laughed at WeWork.
There's a cash flow or plan.
We'll talk about it. Let me finish this and I'll talk about it. So you have that going on, and that's a very important thing, and I don't know the fallout from it. If anybody else does, believe me, real estate is not my strength. I always go to other people. I mean, I know enough about the backbone of it, but it's really not my strength. But when I talk to people who have a lot of respect for and have done very well and are cautious, I'm not talking about people who throw caution to the wind and are just, developers who, they take on way too much risk. These are very solid people with long histories, and they just didn't understand what they were. They laughed because I would ask them. I said, "Would you buy?" No, I don't. Everything that I understand about this is negative, and this was well before they were having all these problems. So,
all right, we got a couple other questions here. So one, Paul asks your thoughts on marijuana stocks going in the 2020 elections. Said, I got a feeling Trump will change his stance to win some voters.
I have no opinion on it, really.
Okay.
I was going to get involved in different ones, and to my own bad investment, but I stayed away from it. There were just
I traded it last year, and I gave up on it going into the beginning of this year only because the saturation's too great.
Yeah, there were a lot of people making promises that I knew that they could never deliver. There was a deal I hooked up in Canada, up in Windsor, Ontario, which was buying 40 acres of greenhouses that had previously grown tomatoes. And when I actually took a pretty good look at those numbers, and I was thinking about it, and you know what? I just stayed away from it. Okay, shame on me, but I don't know.
Yeah, and so anyways, Greg's asking your thoughts on Lagarde saying a job's more important than savers.
Yeah, you know what? I have that piece sitting on there. Hold on, let me dig it up so we can be on the same page. Let me find it. Okay. Lagarde, we should be happier to have a job than to have savings.
I think you touched on it the other day too.
Yeah, it's very similar to the Fed. When they would tell people to stop crying, both Bernanke and Yellen, Powell has not been as demonstrative, but Bernanke and Yellen both talk to you like a kindergarten teacher would talk to a child. Stop crying. We went through that litany. It's more of the same. I think she may regret saying that because this is the problem. But she is on the offensive against Germany. But she, in the way that Lagarde works, he went and lined up some Germans who would support her in whatever she wanted to do. But she would, it's more of the same. Stop crying, stop crying, stop crying. I'm on the article, Euro Hedge.
Here's a comment, Ira. The guy just wanted to thank you. He said, thank you for sharing your knowledge. It means a lot to us. Love his blog as well.
I can't hear, Judd, I couldn't hear what you were saying.
It was just a thank you from somebody.
Okay. The Lagarde is really right where I thought she would be. No, it's not a surprise. It's just going to be trying to figure out how best to trade this.
Yeah, and I'm still looking at all these long-term point figures. They aren't showing any type of backing off, really, at least not yet. And you also had a breakout on that quarterly. Hey, Whit.
Who needs to mute out?
Whit needs to mute out.
Who is that? I'll find
Hold
it.
on.
Who is it?
I just muted everybody. Ira, I'm just going to unmute you here. Just wait 1 second. Let me find you back in here. Because these guys... All right. Ira, you're unmuted. All right.
Okay. All right. So, so going back to it's that issue raised by Lagarde, because, Zero Hedge jumped all over it, as did a few others. The Germans will push back on this again, because nobody entertains the key question, and it will remain the key question. Is the German guarantee of the European project an actual fiscal stimulus program? I maintain that it is. And until they start asking the question more, and I hear people, I want to hear from Arian. I want to hear from guys like Larry Summers. I want to hear from Lagarde. It's a serious question and really puts things in perspective about where we are. And it is a potential fallback position for the Germans to say, hey, we're not doing anything, okay? We're not doing anything because we're on the hook for this whole thing anyway. So tell us what we should do. Because, again, when is monetary stimulus fiscal stimulus? That will be the question that all economists will be dealing with for the next 20 years.
All right. All right, guys, anybody else? You know, some of these guys are talking about infrastructure.
Yeah. Well, we'd love to see that. I think the copper is trying to get ahead of that, by the way.
Yeah.
Because that's just, you know, because I think probably the supply-demand situation in copper because of all the advanced vehicles that demand a lot of copper and a lot of stuff that goes, you know, from the windmills to Teslas. There's just going to be a whole lot more demand for copper. And there are some big projects that have come on and whatever's going on in the Congo and other places. So, but it'll have to compete with massive infrastructure projects. And what will those infrastructure projects be? Are they going to be green oriented or are they going to be bridges, roads, airports, and things of that nature? That's what we don't know. You know, I know the politicians love shovel ready. There's nothing ever shovel ready.
Well, I'll tell you what, if you're looking at copper as a surrogate trading with the S&Ps, it's not a good high today. It's just shy of the 200. It's into the 250-week moving average cross. It's a lousy place to run for resistance.
Yep, and look what happens as soon as, you know, everything, you know, the trade discussion ramps up again because now the White House, you know, they came out with what was the headline? That there's people, insiders pushing back against the president's action. And then they rolled Kudlow out, I guess, to countermand. That was something. I mean,
is that why we came off? Is that why the equities came off? Because they rolled Kudlow out again.
I'll dig it out for you right now. There will be tariff concessions if there's phase one deal. And the expected Kudlow message, but yes, Kudlow, we know this, but they want all the tariffs removed, bro. That's how somebody sent it to me, which is right. So, you know, that's where we sit. What do you?
Yeah, Aussie yen, we're right to the 200-day, backed off. If that thing starts closing under 75.32, then that's over.
Yeah, it's wow.
It's just a day-to-day thing.
You know, interesting. One of the better plays, and we had talked. I said it was is that we actually got the Eurodollar 2021, which was inverted by 10 basis points, I believe, by the Fed meeting, or 8 basis. Now we actually went 2 points positive today. It was 10 negative, now it's 2 positive on the 2021, which has been a really good proxy for watching the steepener place. So that's what, you know, has been moving around, you know, all kinds of tariff stuff. And I guess Donald was out tweeting, stock market a big today, a new record. Enjoy.
Oh, it's unbelievable.
What a ridiculous comment. You know what? When things are good, let them be good. You don't have to stop putting your finger in it. Everybody knows. You don't have to tell them. You don't have to tell them. So any other questions before I get...
No, that's it. We just, I don't really see anything else in here, Matt. You have anything else you want to add?
No, I don't think so. Every time you leave, I always seem to have, things pop into my mind. But
well, write them down and let's get to them.
I will.
All right.
All right.
Well, thanks, Ira.
Yes, thank you again.
I'm late. I'm late in the day, and we've already seen so much movement. But hey.
Well, the thing you got to watch right now are some of the transport names getting in a profit-taking mode. I mean, FedEx just dropped $3. So people are taking money off the table here.
Hey, listen, I don't know why they haven't up until now, to tell you the truth.
Yeah.
What are you waiting for? Again, because I raised that issue about Warren. If she really starts gaining traction, I know it's way too early. But if, then it's going to become a self-fulfilling prophecy about the impact, because these guys are all putting it out there. And, Ray Dalio speaking, we're on the verge of a revolution.
Yeah, but he thinks it's insane. Yeah, and the railroads go straight up, so we can all start riding the rails.
No, it'll be too expensive. All right.
Okay. Thanks.
Okay. All right. Thanks.
Bye.
All right.